Good morning. It's Tricia with Easy E-mini Trade, and I just want to go over a few setups from yesterday on the Slinky just to back up all that you learned during the webinar last week. So let me just get right to it, and hopefully you'll find it helpful. So you're looking at ES from yesterday morning. I have this on a 4 range. If the market's going too fast, then switch it up to a 5 range or a 6 range. Like I've said before, you don't have to be married to any one particular chart style or chart size. So just have some fun, test it out. All right, so this is like right off the open. So this would not be one that I'd be interested in, but you can see closing below the super trend here. And technically, we're in line for a short, right? The green line's below the red, but we have these markers if you're using Gordon's indicators. I'm using both of Gordon's indicators down here. It's the Easy Stochastics and the Easy Stokes signals. So if you're interested, you can go to my site and just go to the tab for Gordon's indicators, and these are the 2 of the indicators, okay? But anyway, this is telling me there's 40-point gap between the 2 stochastics, and generally speaking, that's giving me a heads up that price is going to either go sideways while the space fills or go in whatever direction the green line has to go to find its way to red. Now, wouldn't give it too much weight right off the open because the fact it's right off the open, but regardless, you could see that it does go sideways here while that space is filling. Now, you could have decided to take that and then just decide where support is below you and if there's enough room to attempt it. And if you decide there is, then you take it. If there's not, then you pass. So no real re-entry, like on a pullback here, that I would take as price is moving lower here. So I would have to wait for a retracement or a new setup. Now, right here, you do get a buy setting up. Now, do you want to take a buy after the market just went lower? The main real question is, if I take this buy, where is resistance? Because if we look to the left, we can see the areas from the morning where price was kind of getting hung up here. This is pre-market, and so that was around, what, 38.75 area. So if you take this buy, what would go through my head is, okay, the market just moved lower. Is this just a retracement, or is it going to change direction? Obviously, we don't know. So we get closed above the super trend stop here, green line above the red, but again, now we've got that 40-point gap. So generally speaking, what we would expect to happen is that price is going to hit resistance and go sideways while this space fills. So if you wanted to be a little more aggressive and go against the move that just happened, knowing that you have resistance up here being 35.25, that's a 50% fib retracement area, or up here where I just drew that line at 38.75. So if I take this trade, a tick above that bar, it's 33.50, and then I've got this area up here at 35.25. So not quite 2 points worth of space, but I may be willing to attempt that because I can use a fairly tight stop, right? And then what would give me the heads up likely to get out would be as it's hitting this resistance area here. You can see it does eventually get through, maybe 10 or 15 minutes later, but I'm not going to sit in this trade for 15 minutes going sideways. I can already tell you that. So what I would be looking at as an indicator that I would get out is, here it is hitting this resistance area. Now I've got a higher high here than here. And if you look at my stochastics in that same general vicinity, you can see I have a lower high here than here. So that's giving me a heads up that price is likely to pull back off of that area. So I can use that as my target, maybe come out with 1.5 points or so. A little further along here, we get this short, right? Technically valid because closing below the super trend, 40-point gap is telling us this is likely going to bounce or go sideways while that space fills. So just like this one back here, I know I have support below me at this 38.75. That's the line I drew when I looked to the left from pre-market. So if I decide there's enough room to take it, I could take it. The entry would be around, let's see, what would that be, about 40.25 with this area here at 38.75. I would likely use like 40.25, a couple ticks above that area. So is there enough room to take it? again, that's going to be subjective to each individual. I would pass on it because there's just not enough room. And then if you did take it as it's coming down to this area of support, you'll notice that you get divergence to the upside, giving you a heads up that price is likely to bounce off there. So I would be more inclined to probably buy the bounce off of a support area with divergence, as opposed to taking this short with only like a point's worth of space. And same situation here. We get a valid buy closing above the super trend here. Buy would be at like 43.50. We look over to the left here. This is the area that's been holding up, 44.50. Only a point's worth of space, so I'm going to pass. So the whole point in using the stochastics is to keep us out of this sideways crap, because we can always short resistance and buy support if the market is going sideways within a range and we're not getting, enough room to take these setups, right? So that is always an option. Here we get a short. We know support, so this would be 40 1/4. Short would be 40. We know we've got support down here at that 38.75. So you have about point and a half, 2 points worth of space. You could attempt it. You probably come out with like a point, because you'll notice here right after you get in, or before you get in, you got that 40-point gap, so it's probably going to come down to support and bounce. So if there's enough room, attempt it. If not, pass. Here we get a buy. Entry here would be at 42.75 with this area here. I'm going to use this as a target area. Is there enough room? So 44.50 from an entry at 42.75. Maybe about 2 points worth of space. And we don't get the 40-point gap until after we're already in. So I would go ahead and attempt that, because to me there's enough room to attempt it. I don't need a lot, right? Because you can trade multiple contracts. And then once in, as it's attempting to break through this area and it holds, you're going to notice that as it's coming up there, you have divergence to the downside. So that would be a heads up to tighten your stop or just take your target, whichever you did, or if you stayed in, either way. And you could always use just under, if you're long, use just under an area of support as your stop, or if you're short, use an area just above resistance as your stop. You can always use the opposite super trend as your initial stop. So if I took this buy here, for example, I can use it under the super trend here as my initial stop. So there's lots of ways, obviously, to determine your stop, your target, but the main thing is when you're getting in, to know the areas that you're taking your trades. And then as price is climbing higher, you can always take a pullback once it's established that it's got a strong trending move happening, or a strong trend for the day. And let's take a quick look at the 1 minute, see what happened on that yesterday. And this is on ES, so realistically, you trade something that may be moving a little bit more. And that's the thing. If you're looking at an instrument that just is not moving, then trade something else, right? Okay, let's see. So here we are yesterday, set up right off the open. Again, I don't trade the open, but if you were looking at this as a short right off the open, one of the criteria for the 1 minute setup is breaking the super trend. Same criteria for the stochastic as the Slinky, but I want to be on the correct side of the 30 EMA, which is the black line here. So even if this were a little later, I'd have to pass on it. And here we get a buy, and right into resistance. Everything's in line to take it. Now, one thing I do want to remind you guys from the webinar is that if you get the 40-point gap on a time-based chart, typically it's going to go sideways while that space fills, generally speaking, because it's obviously a much slower moving chart than a range chart. So here I get the buy. Technically it's valid, but I got my 40-point gap as I'm coming into resistance. I'm not on the correct side of the 30 EMA. So I would pass on it for myself. Even though it went on, you're going to have that. You're going to have trades that are going to go on to work out that you passed on, and trades that are going to stop you out that were good setups. That's just trading. Here, price breaking super trend stop. It's not valid because our red line's in over bought, so we would still be looking for a buy. What you could do is if you get price trade down to support, you could then buy off support. It doesn't quite make it there, So nothing really to do here, nothing really to do here. It's not valid. So you can see here the same view as what you had on the range chart. All that sideways we saw on the range chart, now you're looking at it here. It's not going to change the fact that price is going sideways in a range. So that's what you have to remember. Price is price is price. The view might look a little bit different, but it's still sideways. So you have to make a determination on what trade you're going to take and which trade you're going to pass on. If, like I said, there's no room, then just pass on it. Go look at something else. Look at the Russell. Look at YM. If you're trading NQ, look at NQ. Or the micros. So curious to see how you all are doing after the webinar. So I will try to post another video at the end of the week, and I hope you all have a fantastic day. Take care.